In 2008, ordinary Americans lost $16 trillion in wealth. By 2012, the richest 1% had captured 95% of all recovery gains. This wasn't an accident. What if I told you there is a 500-year-old playbook that the ultra-wealthy have used in every single financial crisis? A pattern so consistent, so predictable, that once you see it, you can't unsee it. And here's the uncomfortable truth nobody wants to admit. Every financial crisis in modern history has transferred massive wealth from ordinary people to a tiny elite. Not sometimes. Every single time. The Great Depression of 1929, the savings and loan crisis of 1989, the dot-com crash of 2001, the 2008 financial collapse, the 2020 pandemic shutdown. Same pattern, same winners, same losers. And right now, in 2025, the conditions for the next wealth transfer are being set. You might already be on the wrong side of it, but this video isn't about doom. It's about understanding, because once you see the pattern, you can protect yourself, or even position yourself on the winning side. Let me show you exactly how this works. And it starts in a place you'd never expect. Medieval Italy. Florence, 1397. A young banker named Giovanni de' Medici discovers something that will change history. He realizes that during chaos, the wealthy become terrified. And terrified people make stupid decisions with their money. Here's what Giovanni understood that most people still don't. In normal times, wealth grows slowly. But during a crisis, wealth can be captured rapidly. Because crisis creates two types of people. The first type is the panic seller. They own assets, land, businesses, gold. When crisis hits, they're terrified. They sell everything at the worst possible moment, just to feel safe. The second type is the prepared buyer. They hold cash or credit. They wait, and when everyone else is selling in terror, they buy at massive discounts. Giovanni de' Medici positioned the Medici Bank as the second type. During the plague outbreaks of the 1400s, noble families panicked. They sold land for pennies on the dollar. Giovanni bought it all. Within one generation, the Medici family became the wealthiest in Europe, not by working harder, by understanding the psychology of crisis. But here's what's even more disturbing. The Medici didn't just profit from crises. They learned something else, something darker. They learned that crises could be manufactured, a well-timed rumor, a sudden withdrawal of credit, a whisper about a bank's solvency. Panic spreads faster than plague. By the late 1400s, the Medici had crashed rival banks across Italy, not through competition, through manufactured panic. When their rivals collapsed, the Medici absorbed their customers, their assets, their power. This was the birth of modern financial warfare. And the playbook they created is still being used today. Let me show you how this same pattern evolved over the next 500 years, and why it's about to happen again. After analyzing every major financial crisis since the Renaissance, I've identified a 5-phase pattern. I call it the wealth transfer formula. It's been used by the Medici, by the Rothschilds, by J.P. Morgan, and by modern hedge funds. Once you see it, you'll recognize it everywhere. Phase 1. Expansion and euphoria. Every wealth transfer begins with a boom. Easy credit floods the system. Asset prices rise. Ordinary people start borrowing to invest. They feel rich. They feel smart. They feel invincible. In 1929, taxi drivers gave stock tips. In 2007, strippers owned 5 houses. In 2021, teenagers became crypto millionaires. Same pattern, different era. This euphoria isn't accidental. It's manufactured. Central banks lower interest rates. Banks lend freely. Media celebrates the new winners. Everyone believes this time is different. But the insiders, they're doing something else entirely. They're selling, quietly, steadily, to the very people who think they're getting rich. Phase 2. The trigger event. Something breaks. A major bank fails. A fraud is exposed. A war starts. An unexpected event creates sudden fear. In 1907, it was the collapse of United Copper Company. In 1929, it was the London market crash. In 2008, it was Lehman Brothers bankruptcy. In 2020, it was a pandemic lockdown. The trigger doesn't cause the crisis. The trigger reveals that the crisis was already there, hidden in the debt, hidden in the leverage, hidden in the lies. Phase 3. Panic and capitulation. This is where wealth is actually transferred. Not during the boom. Not during the trigger. During the panic. Ordinary people, terrified of losing everything, sell at the exact bottom. They sell their stocks at 40% losses. They sell their houses below mortgage value. They sell their businesses for pennies. The human brain can't handle financial terror. When your net worth drops 50%, your body releases cortisol. You can't sleep. You can't think clearly. Every instinct screams, get out, sell, save what's left. But the prepared buyers, they're not panicking. They're shopping. J.P. Morgan during the panic of 1907 bought competitor banks at 10 cents on the dollar. Warren Buffett during 2008 bought Goldman Sachs preferred shares with a 10% guaranteed return. BlackRock during 2020 bought billions in assets while everyone else was selling. Same crisis. Opposite behavior. Opposite outcomes. Phase 4. The bailout. Here's where the pattern gets truly disturbing. After ordinary people have sold at the bottom, the government steps in. Suddenly, trillions of dollars appear to save the economy. But where does that money go? Not to the people who lost their homes. Not to the workers who lost their jobs. To the institutions that caused the crisis. And to the wealthy buyers who just acquired assets at discount prices. In 2008, the Federal Reserve created $4 trillion in new money. Banks were saved. Wall Street bonuses resumed within months. But 10 million Americans lost their homes. The bailout doesn't save ordinary people. The bailout inflates the value of assets that ordinary people just sold. The wealth transfer is complete. Phase 5. Recovery and concentration. The crisis ends. Asset prices rise. But they rise into the hands of those who bought at the bottom. After 2008, the top 1% captured 95% of all wealth gains during the recovery. After 2020, billionaire wealth increased $5 trillion in 2 years. The middle class didn't recover. The wealth just moved upward. This pattern has repeated for 500 years. And now I'm going to show you something that very few people understand. The same families and institutions keep winning. Generation after generation. Crisis after crisis. How? In 1815, Nathan Rothschild was the wealthiest man in England. He didn't inherit the money. He captured it. During the Battle of Waterloo, Rothschild had built a private intelligence network across Europe, carrier pigeons, fast ships, paid informants. He knew Napoleon had lost at Waterloo a full day before anyone else in London. But here's what he did. He didn't immediately buy. First, he sold. Publicly. Dramatically. His traders dumped British bonds in front of everyone. The London Stock Exchange panicked. Rothschild is selling. He must know something. Napoleon must have won. Everyone sold. Prices crashed. And then, quietly, through intermediaries, Rothschild bought everything. At the lowest prices in decades. When news finally arrived that Britain had won, prices soared. Rothschild had multiplied his wealth overnight. Manufactured panic, insider buying, captured wealth. The Medici playbook, executed at industrial scale. The Rothschilds used this strategy for the next century. Every European war, every financial crisis, they funded both sides. They profited from the chaos, and they accumulated. But here's what most people don't know. These techniques didn't stay with the old families. They were adopted by new players. More powerful, more systematic, more invisible. In 1910, 7 men gathered on a private island off the coast of Georgia, Jekyll Island. They represented 1/4 of the world's wealth. Their mission was secret. Their creation would change everything. For years, they denied the meeting ever happened. When it was finally confirmed decades later, the details were still hidden. What were they planning? The Federal Reserve System, a private central bank disguised as a government institution with the power to create money from nothing and to decide who gets it first. Here's how it works. When the Fed creates new money, it doesn't go to everyone equally. It goes to banks first. Banks lend it to their biggest clients, wealthy individuals and corporations. By the time that money reaches ordinary workers as wages, it's already devalued. Prices have already risen. The wealthy bought assets. You're paying more for groceries. Same money, different timing, different outcomes. This is the Cantillon effect, named after an 18th century economist who first described it. Whoever gets new money first wins. Whoever gets it last loses. And the system is designed so that ordinary people always get it last. In 2020, the Federal Reserve created $4 trillion in 4 months, the fastest money printing in history. Where did it go? Asset prices exploded. Stocks hit all-time highs. Real estate soared. Bitcoin went from $6,000 to $69,000. But wages? Barely moved. Inflation crushed purchasing power. The middle class didn't get richer. They got further behind. Every month, every paycheck worth less. Every asset price higher. The wealth transfer happened in real time. Invisible, relentless, legal. But here's what's truly disturbing. The pattern is accelerating. The crises are getting closer together and bigger. What used to happen once a generation now happens twice a decade, and the conditions for the next one, they're already in place. Let me show you exactly what the insiders are doing right now. Right now, in 2025, we're seeing Phase 1 behavior, expansion and euphoria, AI stocks trading at 50x earnings, speculative assets reaching new highs, easy credit returning, retail investors flooding back into markets. This time is different. The same 4 words spoken before every crash. But watch what the insiders are doing. Corporate executives are selling stock at the highest rate since 2021. Private equity firms are sitting on record cash reserves. Wealthy families are accumulating physical assets, land, gold, productive businesses. Why would they be selling if things are so good? Why accumulate cash if markets are rising? Unless they know something. The national debt is $36 trillion. Interest payments alone cost $1.2 trillion per year, more than defense spending. The commercial real estate market has $2 trillion in loans coming due. Banks are sitting on massive unrealized losses. The Federal Reserve is trapped. Lower rates, inflation returns. Raise rates, defaults begin. Every crisis begins the same way. Everything looks fine, until suddenly it doesn't. A trigger event, then panic, then wealth transfer. And if the pattern holds, we're in the late stages of Phase 1. The trigger is coming. Maybe a major bank failure. Maybe a sovereign debt crisis. Maybe a geopolitical shock. The insiders don't know exactly when, but they know it's coming. That's why they're already positioned. Now here's the part of this story that changed everything for me. The part that took months to understand. I kept asking the same question. If this pattern is so obvious, why doesn't anyone stop it? Why doesn't the government intervene? Why don't regulations prevent these wealth transfers? Then the first found a document from 1913. Congressional testimony from Representative Charles Lindbergh Sr. He was investigating the creation of the Federal Reserve. And he said something that froze me. This act establishes the most gigantic trust on earth. When the president signs this bill, the invisible government by the money power will be legalized. The people may not know it immediately, but the day of reckoning is only a few years removed. He understood. Over a century ago, the system wasn't designed to prevent wealth transfers. It was designed to facilitate them. The crashes aren't bugs. They're features. Every generation, ordinary people work their entire lives. They accumulate slowly, save carefully, build modest wealth, and then, like clockwork, a crisis comes. And that wealth moves upward to the same hands it's moved to for 500 years. But here's the thing. Once you see the pattern, you're no longer trapped in it. The Medici didn't have special abilities. The Rothschilds weren't geniuses. They understood human psychology. They understood the pattern. And they positioned themselves on the right side of every crisis. You can do the same. Not by trying to time markets, not by speculating on crashes, but by understanding the game. Recognize euphoria for what it is. The setup for wealth transfer. When everyone is buying, ask who's selling. When everyone is celebrating, ask who's preparing. Accumulate assets that survive crisis. Land, essential businesses. Skills that can't be devalued, and never ever sell in panic. The people who lose in every crisis share one trait. They act on fear. The people who win share one trait. They act on preparation. The next wealth transfer is coming. Maybe in months, maybe in years. But it's coming. The pattern is too old, too consistent, too profitable for those who run it. The only question is, which side of the transfer will you be on? The panicked seller or the prepared buyer? For 500 years, wealth has flowed in the same direction. Not to those who work the hardest, to those who understand the pattern. Now you understand it too. What you do with that knowledge is up to you.